Welcome to the Muse Cash Runway Model Overview video. This tool provides you with a 24-month forecast of your cash runway, starting at the month of your choosing, and based on as many as 3 scenarios. It provides a simple framework for entrepreneurs to consider how changes in revenue, operating expenses, and payroll under different scenarios will impact the cash flow or cash runway of their business. Input cells are in light blue and are the only cells that can be changed throughout the model. You can link to these blue cells from another spreadsheet rather than inputting each assumption. Use the orange buttons to navigate quickly within each sheet. The large buttons at the top of each page facilitate navigation between sheets. We'll start with the General Assumptions tab. You will name your scenarios here. Note that these 3 scenarios names are flexible to accommodate any cases you wish to consider. We have started here with an original forecast, or the forecast you had prior to the COVID-19 pandemic, but this can be any base case you wish to use. An expected case could be your forecast now, which is what you expect for your business in light of the pandemic and recession. And then there is a downside case, which is the worst case scenario for your business in the event of a prolonged recession. Next, you're going to name your 3 business segments. Decide how you would like to break down your revenues. You have the option to do so in as many as these 3 segments. These can be different product lines, services, or subscription tiers. They can also be different customer segments. It's completely flexible. Then choose the start date of this forecast and add the balances for cash, current assets, and current liabilities at that start date. Next, we're going to move to the Revenue and COGS tab. This tab provides the functionality to look at various revenue and cost of goods levels based on your original forecast, your current outlook, and then a worst-case scenario. This analysis works whether you have a traditional unit sales model, a subscription model, or a services contract. Under revenue drivers, we start with orders. Orders or volume can either be your units sold, your subscribers, or your contracts. You should input your orders from your original forecast and then apply a discount to that volume for the other 2 scenarios. Make sure you do this for all 3 segments. Next is average order value or price. This is the price at which you will sell those units that you listed above. AOV needs to be input separately for each of the 3 scenarios. If you wish, you can skip right to the revenue calculation section and enter in or link your expected revenues from an existing revenue model into your original forecast. And then you can modify those for each of the other 2 scenarios. Next is average order COGS. For each segment you've identified, add the corresponding cost of goods or the variable cost incurred for each new item sold. You have the ability to change the unit costs by scenario. If they are the same, just copy from above. Alternatively, you can go straight to the COGS calculation section and input or link COGS from another spreadsheet. You will see the gross profit calculation at the bottom of this tab. Next, we'll move on to the Operating Expense tab. On this tab, you can enter as many as 50 expense line items and modify each for your 3 scenarios. Do not include any labor or cost of goods in this tab. You will start by clicking the orange button called Inputs and start inputting your expenses. Please label the name of your expense in the blue cell. Enter your monthly expense in your original forecast and adjust for each scenario. At the top of the tab is the income statement summary showing gross profit and operating expenses by scenario by month. Below that is a summary of your operating expenses by scenario for the first and second 12 months of your forecast. This gives you a big picture overview of how expenses change by scenario. Next, we're going to move to the Employee tab. On this tab, you can enter payroll expenses for up to 100 employees and decide which employees you could possibly let go. Start with your general payroll assumptions for benefits and payroll taxes. We have put in the PPP assumptions, loan assumptions as they stand today. This tab includes up to 2 optional rounds of employee reductions. Fill in the month of the reduction and how long you plan to offer severance and healthcare benefits for both potential sets of employee reductions. If you're considering cutting the wages of the employees you intend to keep on your payroll, you can enter an optional wage reduction here, which can vary by month and by scenario. Then fill in your monthly wage by employee. And from the dropdown, select if and when that employee will be eliminated. Reduction group 1 will be accounted for in the expected scenario, while reduction groups 1 and 2 will be accounted for in the worst case scenario. At the top, you will see a summary of labor expense for all 3 scenarios. If you're applying for the PPP loan, then you will want to make sure the percent reduction in salaries and headcount from the start date of your original forecast is not more than 25%. Otherwise, the forgiveness amount will be reduced. These cells will turn red if it exceeds that 25%. Once this is complete, you can move on to the P&L. In the top left of this tab, under Active Scenario, choose from the drop-down menu which of your 3 scenarios you wish to be reflected in your P&L statement. Note that the first 12 months and the second 12 months are summarized, but they do not necessarily coincide to your calendar or fiscal years. Next, we'll move on to the Cash Flow tab. The cash flow statement is presented separately for each scenario. You can navigate with the buttons at the top left. Each of the scenarios requires some working capital and other assumptions. Enter your current accounts receivable days outstanding from your accounting software's AR aging report. If there are some very old receivables that are outliers, you may wish to modify the number you put in this cell. Similarly, choose how many days of inventory you have or would like to have on hand, and whether this is based on your revenues or your COGS. Choose the number of days which your accounts payable will be outstanding. Visit your accounting software AP Aging Report for insight in your average days payable outstanding and whether this is based on revenue or cost of goods sold. If you have other current assets or liabilities, you can input them on these lines. Next, you can move on to your other assumptions. Enter tax payments, any asset sales, capital expenditures, funds from debt issued, interest and principal payments, and finally, any other sources or uses of cash in the period, such as grants, net equity investments, or personal funds deposited. When you go on to your other cases, think about how your accounts receivable days may get stretched as your customers stretch their payments to you. And also think about how you could possibly stretch the number of days it takes for you to pay your payables. The final row of each of these scenarios shows your projected monthly ending cash balance. This will be visually presented on the Cash Runway tab as well. Next, we move to the Cash Runway tab. The Cash Runway is presented in this final tab. This tab summarizes how different scenarios can impact your liquidity. The first graph shows the ending monthly cash balance for all 3 scenarios. Below it, you will see the number of months of cash runway and average monthly cash burn for each scenario. The second graph shows sources and uses of monthly cash flow for the activated scenario, which is shown here. This page is set up to easily print and share with interested parties. Given the present environment where information is changing every day, we encourage you to revise your assumptions over time to more accurately measure liquidity as business conditions change. We hope that you will use the Muse Cash Runway model as a powerful tool to help you think ahead and do contingency planning. Please fill out the feedback form, which can be accessed by clicking on the Send Feedback button in the header, and let us know how this model helped you and how it can be improved. If you have any questions, please email us at info@museadvisors.com. Thank you.